Candlestick Secrets, Beginner to Advanced. Pro traders don't want you to know. In this video, we will talk about candlestick secrets that you have to know so you can make big profit in trading Forex or other market. Please watch this video until the end. I will explain to you step by step so you can understand completely about this lesson. Okay, let's begin.
I am a Forex trader with 16 years of experience. I'll share valuable trading insights that I'm confident will help you improve your trading skills. Apology. English is not my first language, and I know my English has mistakes in grammar, word choice, and pronunciation. I'll do my best to explain everything as clearly as possible using simple English. I hope you can understand the key points to help improve your trading skills. Enable English subtitles. Please turn on English subtitles for a clearer understanding of my videos. Everything we share in our videos can be applied to trading Forex, gold, stocks, indices like Nasdaq and Dow Jones, options, and cryptocurrencies. Our strategies work across all time frames, monthly, weekly, daily, H4, H1, M30, M15, M5, and M1. Watch all our videos to gain a deeper understanding of how to apply the education and strategies we provide.
What is candlestick? Candlestick represents four prices: open price, low price, high price, and close price. This is the open price, and then price go down to the low and move up to the highest and close right here. If we see the price movement usually will be like this: open here and price went down to this low and go up until reach this high and close around here. This is the normal candlestick. This green candle, a green candlestick, is called bullish candlestick, and the red candlestick is called a bearish candlestick. For the bearish one, open right here and price goes up until this high and go down until this low and close above here. So the price movement usually like this: open here, go to high, go to low, and close here. Okay, let's move on. This is the candlestick in real chart. So the green one is bullish. It means price tends to go up. And the red one is bearish. It means that price usually go down when there is a very big bearish red candle. So this is the high, this is the low, this is open, this is closed. When there is a very small body like this one, usually the upper move is slowing down. If the price slowing down, there is two possibilities: whether the price will go sideways or reversal to the downside. Okay, let's move on. Candlestick pattern. The first pattern we call Marubozu. Marubozu is the open price right here and the low price also at the same level as the open price, and then price go up to this level, this high, and close the same level as high. This is bullish Marubozu. And the bearish one is the opposite, open right here, and the high also the same level, and price go down until reach this low and close as the same level as the low. So the meaning, buyers, green, take full control with no sellers. The price usually continues except at support or resistance areas where it may either continue or reverse. In the right picture, the opposite scenario applies. So this is the example about bullish Marubozu in real chart. Let's see this candle. This is called Marubozu because the open and the low is at the same level, and the close and the high, there's a very slight little distance, but we can consider this candlestick as Marubozu as well. And look at this candle, the open and the low also very little distance, and the close and the high also very close distance. So this candle, we can also call it Marubozu. When Marubozu appears, bullish Marubozu, usually price tends to go higher. As this is green candle, price usually go higher. This is green candle, price usually go higher, except at this level, because there is a resistance right here. If this candle is Marubozu, hit this resistance area, usually price will rest for a little period or reversal. Or if the price break this resistance, then price can go higher. Okay, let's see another example. So this is bearish Marubozu. Let's see this candlestick. The open and the high is very close distance, and the close and the low also a very close distance. This candle means Marubozu. This one also. The open and the high very close, and the close and the low also very close distance. This can be considered as Marubozu too. When this bearish Marubozu appears, usually price will go down. Like this example, before go down, price usually make a sideways move first, and then slowing down, price will fall down. Okay, let's see another candlestick pattern. And the next one, we call it doji. What is doji? Doji means the open price and close price as at the same level. So open here, and then price went down to the low and went up to the high and close at the same level as the open. This one also doji because the open and the close at the same level. In this case, open and close are at the high of the candlestick, and this one open and close at the low of the candlestick, meaning buyers and seller are at the same level. Usually the price takes a short pause or reverses. Let's see some example. So this candle, we call this doji because the open and the close at the same level. Usually, when doji appears, it means no decision. Usually, price will go sideways, like this. Okay, the next. This candle, also a doji. In this case, the open and the close are not in the same level, but very close distance. We can consider this candle as doji too. This one too. This one doji because the open and the close very close. In this case, the open close very close to the high. This candle also called doji. And this one also doji. Even the open and close is very small distance. It's not exactly the same, but this candle can be also called doji. Okay, let's move. The next candlestick pattern is hammer and hanging man. What is hammer? After downtrend appears this candlestick. The open and the close are very small distance. In this case, open and the close price is at the high of the candle. So you press open here and go down until this low and go up until reach the high and close at the high. In hammer pattern, the candle can be green or red. That's the same effect. After this candle appears, this candlestick pattern very powerful if appears at the support area. Usually it will be a potential uptrend. And the hanging man is the same candlestick, but it appears at the resistance area. So after uptrend, there is a open here, low here, and then high and close at the same level. The candle can be green or red. If this occurs at the resistance area, usually price have a very good potential to go downtrend, meaning buyers attempted to push the price upward. Usually, price reverses with potential for an uptrend because before this candle is a downtrend. And after this candle will reverses to the uptrend. Okay, on the right picture, it's the opposite scenario applies. Okay, let's see some example here. Hammer example. So this candle is hammer, and after a downtrend, there is a hammer here. Usually, price will reverse to the upside, like in this example. Okay, the next example is hanging man. This is a hanging man because the high and the open is at the same level and close right here, low right here. Let's see again. So this is called hanging man, whether green or red, it is the same. So this is the hanging man. After a very strong uptrend, if we look at the left, if there is a resistance here, usually after hanging man, price have a very good potential to go down, like in this example. Okay. Next, the candlestick pattern of inverted hammer and shooting star. What is inverted hammer? It is just the opposite of hammer. In the hammer, the head is right above, and for the inverted hammer, the head is at the bottom, like this. So this is the open. The low is also the same as the open, and price move up and go down and close right here. It's just a very close distance to the open price. So the candle can be green or red. After downtrend, if there is a hammer and there is a support area right here, you can see at the left of the chart, then this is a very powerful pattern. So there is a potential to go uptrend. And the shooting star is the same candle, open here, close here, high right here. The color can be green or red. But after uptrend, appear this candle, and this pattern will be very powerful at resistance area. And after that, price has a potential downtrend. The meaning buyers attempted to push the price higher. Usually, the price reverses with the potential of an uptrend in this case. In the right picture, it's just the opposite scenario applies. So this is the example of inverted hammer. After downtrend, and then there is a inverted hammer. Even the open and the low, there is a small distance, but we can consider this candle as an inverted hammer too, because there is no perfect. There will be a very slight difference, but we can consider that the same as textbook. Okay, so after this inverted hammer appear, usually price will go uptrend. Next, shooting star. What is shooting star? So after uptrend, there is a shooting star candle. Open right here, go up and go down at the very low and close here. So the close price, close level and low level are a very small distance. So this can be considered a shooting star. After this candle appears, usually price will go down. And then there's one more shooting star right here, because this is a resistance, and this candlestick appears at the resistance area. So this is a very powerful pattern. To the open and the low, there is a very small distance. We can consider this as a shooting star too. And after this candle appears, usually price has a potential to go down. Okay, the next pattern we call this bullish engulfing and bearish engulfing. So bullish engulfing is when the first candle was a bearish candle and then appear bullish candle. The close price has to be closed at above this open candle of the previous candle. So the first candle open here, and the second candle close above the first candle open. And bearish engulfing, just the opposite. The closed candle is below the open of the first candle. So the first candle open here, but the second candle close below the open candle. So this can be called bearish engulfing. After bearish engulfing, usually price has potential to go downtrend. After bullish engulfing, price has potential to go uptrend. The meaning buyers have pushed the price higher. Usually price will continue rising with the potential for an uptrend. And in the right picture, the opposite scenario applies. Okay, let's see this example. This is a very big bullish engulfing candle because the close price, the close level is above the previous candle open. And this one too. The close price above the previous candles open. So usually after bullish engulfing, price has a potential to go uptrend, like in this example, go up. And this is a bearish engulfing. The close price below previous candle open. This one too. The close price below previous candle open. So this is an uptrend. After there is a bearish engulfing, usually price has a potential to go down. This one too. Price will go down because this is a bearish engulfing. The next candlestick pattern we call morning star and evening star. This is a combination of three candles. The first candle, morning star, the first candle is bearish The next one is a very small candle. It can be very small candle or bullish small candle or doji. 1, 2, or 3 possibilities. And the third candle, the close price has to close above the second candle and above in the middle of the first candle. An evening star, yes, after the third candle, usually price has a potential to go uptrend. Evening star is just the opposite, also a combination of 3 candles. The first candle is bullish candle, and the second one is very small bullish candle or very small bearish candle or doji. And the third candle has to close below the second candle and below the middle of the first candle. This is the middle, and this close below the middle. So this, if this pattern appears, usually has a potential to go downtrend. The meaning, at the left picture, buyers have pushed the price higher and higher than the second candle. Usually, the price will continue rising with the potential for an uptrend. The right picture, the opposite scenario applies. Okay, let's see some example. For morning star, the first candle is bearish. The second one is a very small. This can be called bullish candle or doji. Doji is the correct one. So the first one is bearish candle, the second one is doji, and the third candle close above the second candle and above, in this case, above the high of the first candle. Okay, so usually after morning star, the price will go uptrend. Okay. Evening star. Evening star is combination of 3 candles. The first one is bullish candle, and the second candle is a small candle. It can be bullish candle or bearish candle or doji. After this doji, the third candle has to close below the second candle or below the middle of the first candle, or in this case, close below the low of the first candle. After this pattern appears, usually price will go down like in this example. Okay. The next candlestick pattern, we call this 3 white soldiers. What is 3 white soldiers? After a downtrend at the support area will appear 3 candles. All the candles has to be bullish candle, and bullish candle. So the size of the candle has to be standard size, cannot be small candle. It can be standard size or big size. It's good. But if one of these candle is small candle, that is not a very strong pattern. So after these 3 candles appears at the support area, usually price has a potential to go uptrend. The opposite one is 3 black crows. So 3 black crows is after an uptrend at the resistance area appears 3 candlesticks, bearish candle, bearish candle, bearish candle, and the size of the candle has to be moderate or common candle, cannot small candle. If one of these is small candle, then this pattern is not so strong. So in this case is a common size of the candle. After these 3 candles appear, usually price has a potential to go downtrend. The meaning buyers are in control in these 3 white soldiers, and sellers are unable to push back. In this example, usually the price reverses to the uptrend because before is downtrend. Reverse to the uptrend with the potential for an uptrend. The right picture, the opposite scenario applies. Okay, let's see some example. So this is what's 3 white soldiers in the real chart. After a downtrend, there is a 3 candles. This is a little bit small or moderate. This is big candle and this is moderate candle. So this combination of 3 candles, we can call this 3 white soldier. After 3 white soldiers appear, usually price has the potential to go up like this. Because this, in this case, it appears at the support area. This is support and this is also support. The next example is 3 black crows. After an uptrend, there is a 3 candles, bearish candle, bearish candle, bearish candle, and the size is moderate, moderate, and big candle. So this is a very good example of 3 black crows. Usually, price has a potential to go down. Okay. Okay. We have talked about some of candlestick pattern. There are also so many candlestick patterns out there, but in this video I will not talk about every candlestick pattern. That's not necessary. I have choose the most important, the stronger candlestick patterns, so you can just remember these few candlestick patterns and you will be fine. You don't need to memorize all of the candlestick pattern. It's no need at all. Just remember these few candlestick pattern because these are very, very strong pattern that you can use, you can apply at your daily trading. And the next topic, we will talk about candlestick power method. Why I said candlestick power method? Because this bullish candlestick and this bearish candlestick, this indicates the very strong one and this one is the weakest one. So this is from strong to the weak. So the Marubozu is the very strong candle for a bullish candlestick. And the weaker than this one is this candle. There is a small wick, small tail at the below and this above. Very small. And the weaker one is like this. The body of candle is half or more than half and has a quite about 40 or 50% of tail. This or shadow, you can call whatever you want. And the weaker one is this one. The open right here, close right here, but it has a tail about a half of this candle. And the weaker one is this one. The body is quite small and the tail is usually quite big if you compare with this body size. And the weakest one is doji. There is no body at all because the open and close at the same level. There is only tail, so there is no strength in this doji. So you have to memorize this candle, then you will be fine in your daily routine. And for bearish candlestick, it's all the same, just the different color. Bullish is for the uptrend and bearish for the downtrend. Okay, this is a very important lesson. You have to memorize all of this pattern. And the next one, we will talk about Candlestick Expert Method by Forex Surabaya. So this is the common candlestick. The open price right here, the low price right here, the high price here, and close price right here. So please pay close attention to these 4 key price level: the open, the low, close, and the high on higher time frames like monthly, weekly, and daily. Because of what? Because banks Big institutions and smart money use these levels to manipulate market prices. Retail traders who don't understand this concept often fall into the traps set by these big players, as they require liquidity to fill their large orders. By Forex Surabaya. So you have to pay attention of where is the location of this four price level, especially at higher time frame, like monthly, weekly, and daily. Usually there is so many manipulation right here. For example, price can go up above the high price of weekly, for example, and then price will go down again. It just manipulate the price. So you have to aware of this very useful information. Okay, the next one we will talk about the real chart. How to apply all this information in the real chart. Okay, this one. So this is a candlestick, and the real chart in this example is in a gold XAU USD. So this is a engulfing pattern. Why? Because the price closed below the low of the previous candle. Usually price will go down, right? Sorry, where was we? Maybe right here. Yeah, usually price will go down, but this is appear at the support area. So this is a support area. See, we call this a support area because price cannot move lower. If this candle appears at the support area, usually price can go to the opposite direction. In this case, price move to the uptrend. And after this, pay attention on the previous. There is a resistance area right here. So if price appears at the resistance area, after break above the resistance, price instantly close to the low of the resistance. It indicates that the price doesn't want to go higher because this is a manipulation. This only make retail trader think that this price will go higher, but what the smart money do, they just drive the price lower and close below this resistance level. So the result, price go downtrend like this. And pay attention, if there's a doji like this, you have to understand where is this level area appears. In this case, this is a support area. See? So because the doji appears at the support and cannot close below the support area, usually price will go uptrend. Then there is a engulfing candle here because price closed just above the previous candle open. Okay, so usually price will go up, and also price hit again at this resistance level. After close above the resistance level, price suddenly go down again and close below the resistance. So it means price doesn't want to go higher. So you have to prepare yourself that there is a very possibility price will go down. Now let's see Euro USD. What we got here? Okay, let's see this one. We can also call this morning star or whatever. Let's see this pattern. Sometimes I just forgot. Yes, morning star. So this is a morning star. Because of what? This is a bearish candle and there is a small candle right here. It can be bearish small candle or bullish small candle or doji. And the third candle just close above the first candle high in this case. So this is a valid morning star. So after this morning star, usually price will go up, like in this example. There is a support right here. This is support. So if there is a support, you have to pay attention what the price will do after hit this resistance area. If the price can close above this resistance, for example, in this case, okay, in this case, price this candle close above this resistance area, but after that, price there is a hammer here. Let's see the name. Sometimes I just forgot the name. Let's see together what is the name of this candle. Hanging man, yes. This is called hanging man. Okay, so let's come back to the price. Here, there's a hanging man right here, because hanging man is appear at the uptrend. Okay, so hanging man, if this candle appear at the bottom, we call this hammer. At the above, we call this hanging man. So there's a hanging man. You have to pay attention. After hanging man, if there is a resistance area like this, usually price tends to go downtrend. So in this example, price will go downtrend. And you have to see there is a support right here. Why? See in this example. This is support, support, support. So after price hits support, and there is a what we call this hammer. Yes, there is a hammer right here. Okay, there is a hammer, and don't hammer because this appears at the support. Usually, price will go up like this. So you have to practice all of this knowledge. You just open your candlestick chart and you just follow. You just watch it every day. You have to train your eyes. You have to see what will happen after this candlestick appear. Usually, there is a reversal near the resistance or support. You have to pay attention of support resistance level. Okay, so the next one, let's see GBP USD. GBP USD. Okay, so there's a very small candle right here because price cannot go lower at this level, so we can call this support. And this resistance, okay, the price broke this resistance area. After broke this resistance area, usually price will go uptrend because there is no downward candles. If after broken this candle, if the next candle right here, this one is close below this resistance area, usually price can go reversal to the downside. But in this case, after closing, price keep closing above the resistance. So it means that price will continue go higher. Like this. And see this? After a very big bullish candle, there is a doji right here. After doji, usually price will make a sideways like here. Like this. Price will take a rest for a little while, and after that there is a very big engulfing candle because this candle closed above the open of previous candle. In this case, close above the high of the previous candle. So you have to prepare yourself. There is a very possibility, there is a potential to go uptrend. In this case, yes, price will go up. And after in this level, price cannot move higher. See this? Some candles just open and close at a very same level. Okay, see this? So price can like this. After the candles they close above the resistance, and the next candle close below the resistance, there is a possibility the trend will go lower. But you have to practice how to read candlestick. Okay, take your time, make a lot of practice, and you can use to it. Okay, the next one we will see USD JPY. So see this, price go uptrend in this case. Okay, price go up, after this level, price cannot go higher than this. So we can call this a resistance area. After this resistance area, see this candle? This is a bearish engulfing. Why? Because the price closed just below the open of the previous candle. Let's see bigger one. Okay, the price closed below this previous open candle. So this is because this is occur at the resistance area. So this is a very strong reversal pattern. Usually price will go down like this. Okay, let's see another example of Australian USD. After big candles, big bullish candle, there is a, yes, we can call this doji, or we can this indecision. Yes, this can be considered doji because of what? There's a very big tail at below and very big tail at the above. So the body quite small if we compare to this tail. So this, after big candle, price suddenly go to the downside. So we can call this a resistance area. Okay, when the price, and this is also a support area. Why? Because the price after hit this support, price cannot go lower than this area. And there is a engulfing, bullish engulfing candle because the price closed above this previous open candle. Usually price will go up. After the price go up and hit this resistance area, the price cannot close above this resistance area. The price also close below. After close here, the second candle, the price close below this resistance area. It means that the price doesn't want to go higher. So you have to prepare yourself. There is a possibility price will go to the downtrend. In this case, price will try once again to hit this resistance area, also fail again and close here. And usually see this is a bearish engulfing candle because the price closed below the open of previous candle. So usually if this occur near the resistance area, usually price will go down, like in this example. Price will go down like this. Okay, so let's see another example. USD Canada. Okay, price will go up. In this case, price go up, and then suddenly price make a bearish engulfing pattern. Why? Because the price closed just below previous candle open. In this case, close below previous candle low. So this is a very strong We can call this is a very strong resistance area. Usually price will go down. Price try again. If we make this resistance area bigger like this, we can cover all these three major levels. Price hit this resistance area and price close below the resistance area. It means that price doesn't want to go higher. Price tends to go to the downtrend, like in this example. And then price tried again to go up until hit this resistance area. And then also appear this bearish engulfing candle, because this price closed below the previous candle open or low, and usually price will go down, like in this example. Price will go down. Let's see another example. USD CHF. Okay, so there is a bearish engulfing candle in this example. See this? Oh, this is too small. Make it bigger and easy to see. Okay, make it bigger again. Okay, see this? This candle is bearish engulfing candle because the close of the candle is below the previous candle open or low. So we can call this area as a resistance area. Okay, then price just fall down like this, and price it doesn't go anywhere. So this, we can call this area as sideways area. Just doesn't go anywhere. Okay, and after this sideways area, what we see, the price suddenly make a very big bearish candle like here. See this? Okay, this candle. Price close with a Marubozu. We can call this candle as Marubozu because the candle has a very small tail at the upside and very small tail at the downside. So this is bearish Marubozu. After bearish Marubozu, usually price will go to the downside. Okay, so let's see another example. GBP JPY. Okay, so what do we see here? After a strong uptrend, there is a bearish engulfing pattern. See this? Why? Because the candle closed at below previous candle open. So we can call this a bearish engulfing pattern. We can consider this as a resistance area. We can call this resistance area. Okay. At this example, price go up again, just at the resistance area. Price close above this resistance area, this candle, and after that, just price close lower. It means that price doesn't want to go up at this moment. Let's see this. So this level we can call this a sideways because price doesn't go anywhere, just around this level. And what happened after this? See this candle and this candle. So this candle, price close above this resistance area. Okay, price close above this resistance area. And this one is very clear example. This is a bullish Marubozu because there is no tail here, and let make it bigger. Okay, see this? This is a bullish Marubozu. There is no tail at below here, and there is a very small tail at the upside. So we can call this bullish Marubozu. After bullish Marubozu, usually price has a potential to go uptrend. Okay, price can go up like this. Let's see another example. In this example, we see Nasdaq. So Nasdaq is indices. Let's see, after a very strong downtrend, what we see here, this is a doji. After doji, usually price will go down like this. Big candle, doji, price go down. Big candle, doji, price go down. But in this case, after doji, price cannot go down. Go up a little bit, up a little bit, go down, make a bearish engulfing, but the next candle also a bullish engulfing because the close is above this open. So we can call this area as a support area because price cannot close below here. So after this price very strong to the downside and hit this support area, and suddenly the second candle make a very big bullish engulfing candle because the price close above previous candle open, and this happened at the support area. Usually price has a very big opportunity to go to the uptrend. Will make a very big potential to the uptrend like this. So this I just draw this as example to you to make you see that this is an uptrend. This is not a proper trend line. I know that. Usually trend line is like this. Oh, sorry, I just lost. Oh, here. Usually if we draw trend line, we can draw at the tail like this. So price will go higher. Let's see another example. So this is a Dow Jones. After a very big bullish uptrend, and what we see, the price make a 3 black cross. What is 3 black cross? Sorry, let's see again this pattern so you can remember. This one, 3 black cross. What is 3 black cross? Let's see in the real example. Okay, so this is 3 black cross. Why? Because this is a very strong uptrend, and then there is a 3 bearish candle with the size of moderate size. This cannot categorize as small candle. So this is a normal size of candles. Bearish candle, normal size. The second one also bearish candle and bigger bearish candle. So this is 3 black cross. Usually after 3 black cross, price will go downtrend like in this example. Okay, so you have to pay attention. Like this is happen very often. So you have to train your eyes. If you understand this concept, you can apply this knowledge to your trading and you will become a very profitable trader. Let's see, the last example is Bitcoin. So after this very big downtrend, what we see here, price make a bullish engulfing candle because the price closed above previous open. So we can consider this as a support area, this level. This is support area. Okay, price go higher after a bullish engulfing candle, because this is quite a very strong rejection to the upside. It means that price doesn't want to go lower than this. So the price just keep go up. So what we see here, this is a resistance. So we can draw this resistance. to the right side. What we see here, after price hit this resistance area, and then the second candle is bearish engulfing candle, because the price just closed below the open of previous candle. So it indicates that price doesn't want to go higher. But in this case, there is a bullish engulfing candle again. It means that the price doesn't want to go lower. So what is this? What is this kind of movement? We call this as a sideways, because there is no clear direction. Price just move inside this box. If you don't understand about sideways, you can watch our video of the second video. We talk a lot about sideways, what is uptrend, what is downtrend. You can watch that video if you haven't watched yet. Okay, so in this case, price close above this resistance area. But what happened? The next candle, there is a bearish engulfing candle, because price closed just below the previous candle open. So it means if this appears at the resistance area, it means price can go down, has a potential to go down. In this case, price go down like this at this area. Why stops here? You just see what happened to the left side. This is also a support area. Why? Because price doesn't want to go lower. See, after hit this area, price doesn't want to go lower anymore. There is a doji right here, and there is this pattern. We can call this a morning star, I think. Let's see again, so you can remember. Yes, this is a morning star. Okay, the first candle bearish, the second one is small candle, small bullish candle, or small doji, and the third candle just close above the second, or above the middle, in the middle of the first candle. In this case, the third candle close above the high of the first candle. So this is a morning star pattern. What is morning star? It means that price has a possibility to the upside, like here. Oh, sorry, like this. Okay, just price go to the upside like this. After hit this support area, this is also a morning star again. See, this pattern repeat again right here. The first candle, bearish candle. The second one is small candle, whether it is bullish small candle, or bearish small candle, or doji candle. And the third candle is close above the second, or above in the middle of the first candle. So this is a valid morning star pattern, because this is at the support area. There is a potential uptrend like this, and we can see that this is big huge candle just close above this resistance area. Okay, so this how we analyze price, and you can practice a lot using all these candlestick patterns that we have learned together. Don't forget, you have to remember all of this pattern and just practice a lot. See how to apply every pattern and every chart. You can apply this on this H1 or daily, whatever you want. What time frame, it's up to you. In this example, I just use H1 as example. Okay, so that's it for today's lesson. You can follow our next videos. We will prepare very useful and very important video in the future. Make sure you smash that like button and subscribe our channel and share our channel to your friend. Okay, we have shared 90% of the candlestick secrets with you, which are incredibly important for your trading success. However, the remaining 10% of these secrets are exclusive to our students. These advanced insights can make a significant difference in your real trading, helping you maximize your profits. If you want to uncover these exclusive secrets, join our trading masterclass where we'll guide you to become an independent and consistently profitable trader. This skill is essential for growing your account from just $10,000 into 12 million US dollar. Check out our first video for more details. You can watch our first video. We talk about this. In the trading masterclass, you will learn how to master candlestick pattern like a pro and apply them effectively in real trading. We'll teach you advanced strategies for deeper understanding and practical application, so you can trade with confidence, independence, and consistent profitability. For more information about the trading masterclass, you can visit our website, which you can see at below description. Okay, see you in the next video.